Tootin' Title and Escrow is fast becoming Acadiana's #1 choice for residential and commercial closings. The full-service real estate closing company has the experience, expertise, and confidence to provide a thorough, timely, and enjoyable closing process. It's your choice. Choose Tootin' Title. ABIZ presents Developing Acadiana. Commercial real estate pros share their views on what's happening now, what's driving it, and what's coming. Our panelists include Ryan Paco, Sterling Properties; David Gleason, Van Eaton and Romero; Jeff Landry, NPW Properties; Flo Meadows, Caldwell Banker Pelican Real Estate; Monty Warren, Bowbox; and moderated by Leslie Turk, End Media Editorial Director.
Personally, I'm most excited about the Whole Foods, just for the ability to go shop there as a customer. But I'm really curious to see what that does to the overall market. Whole Foods has been a name that's been kicked around for a long time. It has the potential to really make Lafayette on the retail spectrum a higher level for other higher tiered tenants that for a long time Lafayette may have been passed over just because of the population size. But really excited about that. Interested to see what the adjacent retailers do, how that intersection flows, and what other developments come around it.
Okay, you see that being upscale?
It's not something that is overdone, but the tenant itself, sure, attracts a higher clientele. And those waves reach a lot of different retailers who are not in our market, who are in Texas, who are in Alabama, in Florida, but kind of always skip over Louisiana. Right. So I think that's a really big plus for Lafayette. It puts us on the same level almost as Baton Rouge, as New Orleans. So I think from the retail scope, it has a big bearing.
I would agree. In addition to what he's saying, I'd like to elaborate. I think Whole Foods creates gravity for a certain tier of retailer, and I'm already seeing it in the phone calls and daily activities of higher end tenants that haven't looked at Lafayette particularly, that are in Louisiana elsewhere. So it creates that gravity. The same right, I'm curious to see how Lafayette, the city, steps up and handles this development through its actual conceptual to fruition stages. There's a lot of entitlement issues still in this property. There's a lot of due diligence hurdles that still have to be crossed.
Infrastructure?
Infrastructure is one of them. That's a biggie. That intersection currently rates as an F, which
means what?
Poor. It means it's a failed intersection on DOTD standards. So because of that, any curb cuts and access issues or requests that are made of that development in peripheral lands, there's a pretty sizable traffic impact study, which I was a part of one previously in the same area, and we couldn't get the things we were looking to get. So there's still some issues, and I've seen some plans that modify the roadway, and those are big off-site cost issues, and that may preclude the development from happening if they can't figure that into pro forma, unless the city helps in some form or fashion, which is yet to be figured out. So that's part of an everyday typical development issue, and especially when you're setting something up in Maine, it's effectively established minus a big greenfield site. There are some hurdles, and it's going to take some time, and you're seeing that through the process. And they've got interest there, but there's still some work that needs to be done. I'm with Jeff. I want to see it happen. I think it's great for the city. It does. I'm going to go back to the word gravity. It creates that draw for a different tier of tenant in Lafayette. So I think that's a good thing when, if it all comes together.
Can you think of a couple of retailers who wouldn't have given us a second look, who will give us a second look now because Whole Foods is coming?
That's always iffy to put on record. There's a couple of high-end, especially clothiers, that are looking now that weren't before. And I might digress into that later, but it's tough to throw out names when you get those calls in confidence.
All right, okay.
Let me add to that just a bit, and we've talked about the national guys, this being a positive for that end of the spectrum. We're working on a project just down the road on Settlers Trace and Beaulieu. Very small project, nothing that's going to really make waves on the small or large scale. However, very quickly, once that sign went up there, it said Whole Foods on the corner. We were marketing ourselves to the neighborhood type of tenants, local tenants. It gave those tenants a lot of confidence to invest just in that little corridor.
Right.
And really, it truly is helping us build that development, which we hope to start in the next 30 to 60 days. So big benefit for us as a company, but those are those things that you can't attribute to them directly, but it is very much an indirect benefit of a development like that.
Yeah, I can see that. Ryan, when you say that it rates an F, I mean, you mean that intersection at Settlers and Ambassador?
Correct, yeah. The way
so it just works so poorly that...
Yes. To not get overly technical, so I've got a 140-page traffic impact study that cost many $20,000 plus to do.
Yeah, I don't want that.
Proves that it's an F. The way it's looked at is there are certain delays in how many seconds it takes a vehicle to move from point A to point B in all of the different movements. And when it gets to a certain threshold, there's an A, B, C, D, like you grade a child's school paper. And this rates as an F. And so the problem that this development and any others in really along the entire Ambassador corridor, most of it is CDF. When you request additional curb cuts and you create added traffic to those arteries, they may deny the curb cuts altogether, because if you add any more, it would therefore further degrade the F. And if you can't maintain or improve, they might not allow those cuts. So then all of a sudden you start asking a developer to spend off-site dollars on an improved traffic signal timing, contraflow intersections, all of those other things, which most developers can't carry and perform, especially when you have high-priced land because of the supply-demand issue. So it's developing in Lafayette, while it's friendly governmentally, it's difficult for other reasons.
So they're supposed to break ground, I believe, in August. Do you think that's a little ambitious for what else has to happen?
Don't know.
Okay.
One of the nice things about what's going on in the oil and gas industry is that it's driving a lot of this retail growth. So I'm excited about some of the new projects that are either just recently being completed or that are coming in the near future. Monty's worked with Halliburton up on the north side. Form Energy is doing a 150,000 square foot building in Schaefer Industrial Park in Broussard. You've got Sedco, which is building a 33,000 square foot on Highway 90. And then we also have Houston Plating and Coating in Scott that I talked to a contractor the other day that's doing that project, and I think they're almost finished with it. So, and then this past week we heard about PXP, who is now committed. I think it's an $18 million project
Minimum, I think,
in the Broussard area. So the same thing that Jeff alluded to in terms of the smaller opportunities we're going to have in the oil and gas industry, because with these big projects, we get the smaller projects. And so I'm excited because, now we need more 10, 8, 6,000 square foot industrial buildings. And right now, believe it or not, we don't have much of a supply when it comes to those type of facilities. So that creates a lot of opportunities.
Okay, we'll circle back to that in a little bit. Flo?
Leslie, we've touched on retail, and David just touched on oil and gas. I am excited after 20 years of being in this industry and taking a look at the real estate development cycle as a whole. What we're currently living in, it's healthy, it's organic, it's not happening because of some incentives such as post-Katrina Go Zone. It's happening because of the robust economy that we have here. So when we take a look at real estate land sales, for example, and take a look at MLS, which is not our entire market, but if we take a look at land sales, it's up 57% last year, 36% the year before. So in order to sustain that much development, you have to be planning for the future. So coupled with the cycle, what really thrills me is the amount of planning that's taking place in our community. We're currently taking a look at Lafayette's comprehensive plan, UL's master plan. Central Park has world-class leadership, and when that comes online, it's going to be a catalytic game changer that's going to ignite this community. Our school system has a facilities plan, Scott has a master plan. Most all of our communities now are getting engaged in planning for and investing in the future, and that bodes well for the next decade.
All we have to do is execute those plans.
Yes.
And not let them sit on a shelf. Monty?
I would agree with your last statement, certainly, Leslie. We have a track record in this community of paying a lot for plans and never implementing them and shelving them. So I hope whatever the plan is, that the end result is good, has community support, and that it gets implemented.
Yes.
But, at least it's being visited. 20 years ago, there was no planning here at all. We certainly, Ryan alluded to the challenges associated with development from whether it's DOT or other governmental entities, and there are substantial costs here to develop that are not included in a land price, and they can be pretty significant, from a retail site, which is typically a high traffic corridor, even to industrial sites that seem like they're in the middle of nowhere, and $1 million later you're just doing your own site work. So,
Costs that are higher here than in other communities?
well, I'm not doing enough in other communities. I can't say that that's the case, but DOT here, we don't have state funding for DOT that is really very significant.
Yeah.
So private entities that are
Has to
developing
step up.
land end up stepping up and putting in infrastructure that in some other communities might be in place.
I think that's nail on head. It's not so much that the cost for doing X, Y, and Z, bricks and mortar and things is necessarily more expensive, but because of a lack of infrastructure that's in place and arteries that can circumvent, the F intersections, if you will, at that point, you've got a problem, and it has to be addressed, and there's no real simple answer. I mean, for years, they've tried to address Johnson Street, and those property owners say, well, you can't have a boulevard, my business is going to crater. Sure, I'll take you to 10 other communities where it works just fine. It's what's your perception is your reality, and that's how it's been, so that's how it has to be. That's not accurate. There's ways to fix those things, and it goes back to plans and have they been implemented. Track record's not so great. I think that we've got a new group of leadership, not only in the levels that pull the levers, but the community that wants to see some things happen. So I think it can get better, but Monty's is spot on. It's easy to say, oh, here's a big green piece of land. Why isn't this developed? Well, one, you've got pricing issues and seller issues and entitlement issues, but then you've got the development side, which is a huge slug of a pro forma that's just not it's difficult, and the spreads are tight.
What are the economic indicators you pay most attention to, and which ones do you think matter the most to your business?
In my opinion, and this is not the only opinion, I think this is shared by most people around, but around the community, oil and gas, price of barrel of oil, or cubic volume of gas, whatever it's selling at, it is, in my opinion, far and away the most important indicator.
The number one.
It's easy to say, but in our business, we primarily focus on office space. I can tell you that the oil spill in the Gulf instantaneously had an impact on the number of phone calls that we just generate on a daily basis, the potential tenants that we were working on, the existing tenants that we had that were on the fence about expanding or moving or consolidating with another company. And it didn't matter what type of business they were in. They could have been an investment group, insurance company, not related to the oil and gas business whatsoever. Yet instantaneously their spigot shut off, which meant our spigot shut off. And as only being in the business world 15, 16 years, not living through the downturn in the early 80s as a business person, it was a very quick lesson to be learned just in the real estate spectrum on how quickly that can impact us. And we saw it before that when we were at $130 and $140 barrel of oil, when Lafayette, you couldn't build houses fast enough in River Ranch, and you couldn't build retail fast enough, or the garden styled office buildings for doctors fast enough. And it's great to feel like we are diversified, and I think we are getting more and more diversified. But that, to me, is the leading indicator. The good news with that is, of course, oil is a global demand that Lafayette's not going to fix the price one way or the other. That said, locally, in my opinion, in the past 4 or 5 years, I think what's been great for a lot of these service-oriented businesses that they've exported their skills. They've exported their businesses to Pennsylvania, to Oklahoma, Dakota, South Texas, which in the 70s and early 80s, I don't know if there was a lot of that going on. Those guys were booming here locally, and they were using the offshore as really a platform. But now, even if drilling in Louisiana goes down, these companies are still thriving. A lot of companies that are tenants in our building, 60, 70, 80% of their business is in Pennsylvania
Yeah.
or North Dakota.
And a lot of them doing even smaller companies doing international work, which I think is what helped companies hold on to talent. They were able to
Absolutely.
send, employees out to other
Sure.
countries just to keep them on the payroll and keep the expertise in-house. Ryan?
Retail sales. That's all I care about. Seriously. Being a retail nerd, that's all I care about. That's what my guys that I pick up at the airport and drive around and ship back on a plane, that's what they're looking at. They're looking at comparable store sales. They're looking at their own store sales. They're looking for a second store. It's all about retail sales. Candidly, they're blown away that Lafayette, when they pull their number in 130,000 people, which is a line on paper as the city limit, the parish is 225 or whatever. That's fine too, but they don't understand the MSA. And a lot of times they'll come in and leave more confused. They see all the traffic at 2 o'clock in the afternoon on a Tuesday, and like, where are these people coming from? Do they not work? Well, obviously they're working to generate money to spend. So it goes back to the income producing capacity of the oil, of the medical, and everything else. But it's all about retail sales, and that's why companies like Whole Foods and others of that next tier are looking at Lafayette as a potential opportunity to expand into. And we're a C-tier market. That's the reality of what we are. We can pretend we're something else, but we're not. I mean, the Dallases and Houstons and Atlantas, those are A tiers. And you get the Austins and Birminghams, those are Bs. And we're a C-tier market. So it takes a while to trickle down, but when you have enough of the peripheral accolades and then the retail sales, they get noticed. And
Can we be a C+?
Technically, I think on economic indicators, we're more than a C. But the way that these guys are looking at all these municipalities throughout the whole country, you get lumped into it almost by population. And like Louisiana, it's kind of been, is what it is forever. I mean, most national retailers, they come down the eastern seaboard, they hit Florida, then they jump over to Texas. And they skip Alabama, Mississippi, and Louisiana, and they kind of start backing into backfilling. I'm seeing that jump not happen as rapidly. We're getting looked at much more closely than we have in the past.
So you're on pins and needles till those numbers come out every month?
No, I'm just grinding away regardless.
All right, David?
I have to say that I agree with both of them, and also I'd have to add, the unemployment rate is good to look at as well. Now, I do a lot of investment. I specialize in investment, so I do a lot of work with investors who are looking at income-producing properties, and they're looking at all of these factors because they want to see how strong our economy is. Because when they invest here, they want to know that in the future those revenues are going to keep coming in. That the business is not going to go out of business, or they're not going to shut their doors. So I think all these are important, and I think they're all good.
Oh, very good. Flo?
Leslie, I want to say thank you to the Independent for hosting Greg Gotro's State of the Economy, because my answer to you would have been so entirely different a couple of years ago. But the last 2 years, you providing the platform for Greg to pull together all of the research that they have done for years and to provide us with the Economic Performance Index.
Yep.
That is the
Very
most
amazing.
invaluable tool, that along with the benchmarking that he unveiled this year. When we meet with our clients, that comprehensive picture of the lagging, the current, and the leading indicators in our economy and how much we've grown, because a lot of site selectors do 90% of their work before their feet touch our soil. So having that kind of info available online where they can take a look at all the factors you just mentioned, along with year-over-year growth, what's happening in our job market, all of those indicators. So before we get them, and that might be why we improve in the future going forward, is having that information be so public. So thank you.
You're welcome. So your answer is all of them, right?
Yes.
Everything that goes into the EPI.
The EPI and benchmarking.
Do y'all think that what LEDA's doing with all of these indicators and bringing them into this report, that's something that sets us apart from communities our size, or, I mean, are competitive communities, do they have those kinds of resources that they're making available to companies that they're trying to recruit?
I would say for cities our size, LEDA is an excellent top-tier development authority in promoting, what's going on here, as well as helping people come in. I'm sure in larger cities, they've got, larger staffs and larger funding and have all kinds of cool tools and what have you. But I think they've been great. Of course, they're a cheerleader for the city and pointing out all the positives, which is, a fantastic thing. But as a real estate person, I have gone to them before and asked for reports and information, and I've been really pleasantly surprised at how willing they are to sit down, to meet, to talk about it. Here's the information we have. How can we structure it in such a way that, you guys can use it to help bring in more business. So I think they've been great all around.
Yeah, they've been, I mean, anything we need, we can get it from them, so.
They are, go ahead.
I'd be shocked if there's a community our size that has it, really.
Yeah.
I'd love to know
Yeah, I
who
mean, I
out
figured it was
there
different, but I
with,
wasn't sure.
even if you get into the 500,000 population towns, I'd be surprised that many of them have that type of an asset.
Well, not to throw anybody specifically under the bus, but I will. All day I've actually been trying to finalize some site selection packages for a real estate committee meeting for one of the tenants that I represent that is coming into Louisiana that's not here currently. Their meeting is on Monday, and I'm doing some work in the New Orleans area for a couple of locations there, and struggled all day to find anything accolade-wise for Jefferson Parish. They've got, and it's a big boy parish, they've got a lot of numbers, and they've got a lot of good things going on, but it was very discombobulated as far as I'm having to try to source here and source there and get to, it is good when somebody can, because Flo's spot on, so much work is done before they even say, we're going to take a look at you by doing some homework up front. And the fact that all that's in one place, it's a pretty good thing, and I think we take it for granted because it's been here for a while now.
Yeah, and it has to save these companies money, that they don't have to go out and
Well,
do all the research themselves.
Again, when you have, and I know the retail side, but this is probably parallel for all industries, when they're looking at 25 markets in whatever southeast region, and they can find, and you make it easier for them, then they're gonna trend towards you because you're helping them do their job. So you all of a sudden get attention that it definitely steps you up.
Monty, did you want to say anything else about economic indicators, or?
I do think that they're all relevant, unemployment, but ultimately it still comes down to energy, period. We are a hub city, we have a great medical community, but none of that stuff would be here. The retail sales wouldn't be there were it not for oil and gas.
And I mean, that's not going to change.
No,
No.
it
Ever?
never will. No, I don't
Ever.
see
Unless we
it.
want to
Say that.
pretend it, but it's not happening.
Yeah, okay. It's North Lafayette, about to get its first TND Couret Farms. Anybody want to address the impact that'll have on North Lafayette, development there?
Before Couret Farms was decided to be developed, we had Sterling's development at Louisiana Avenue, and I thank Sterling for being the impetus for allowing us to have growth in that area. And then subsequent to that, you began to see corporate expansion. So all along Pont de Mouton, and then we had several companies expand along the Thruway and along University. So this residential component is what was needed to spur the what next. The products needed, because what will happen next as a result of it will be education, retail, entertainment. You'll see much more in the way of all sectors of real estate development happening in the northern corridor because of finally having this residential component.
So you think it's a real shot in the arm for North Lafayette?
Yes, I do.
What else would y'all, I'm not sure of everything that's planned there. Does anybody know the specifics about everything that's going on there?
I don't really. I think it's an exciting project for that part of town, but it's also interesting to know where it is. I mean, that Pointe de Mouton corridor, because of the improved roadway, is, I'm not saying the development wouldn't have happened, but I can tell you Halliburton wouldn't be there were it not for that road. And the extension of it going over to Louisiana Avenue and connecting to Sterling Shopping Center, I think is going to be huge.
Yeah.
I think that's going to be the spot to develop for the next probably 5 years. Whether it's retail, any type of development, they're going to want that connectivity with Pointe de Mouton.
And I think that leads back to the differentiation of developing in Ambassador Caffrey. Those roads are there, they're not as congested, there's some different connectivity, they were done with some foresight. And not to blame the administrations of the past, I mean, they put an ambassador in and College Salumi, they expanded them, they just couldn't have predicted that it would have grown as fast as it did, and they just weren't able to mitigate during that process. So the new infrastructure up on 49, Pointe de Mouton, 10, that connectivity will create some opportunities that you may see some folks go up there who maybe that's not their first choice, but it's a more cost-effective choice, and it's not far behind. It may be 1B or 1C, so they can still make that work.
Yeah.
Geographical area that's a hottest for growth. Any thoughts on that?
We just talked about Highway 90, you know, that Broussard, New Iberia area on Highway 90 has really been a hot spot for growth. And I think that's been the majority of our oil and gas industry growth. As far as retail, you know, Ryan could probably talk to that. You know, that Ambassador Caffrey area has done really well.
I mean, we can sit here and try to outthink the room all we want. When it comes to retail, it's South Ambassador. I think we're going to see some stuff on 90, especially because the shopping center at Louisiana and 10, most of those retailers have exceeded their sales projections, which is good, and that trickles through the retail community. But the new entries, the new tenants to Lafayette, they can't risk that. They're going south on Ambassador Caffrey. That's just the reality. The question is, can developers afford it with some of the lack of infrastructure that's there, the off-site costs that are going to be thrown onto them for asking a developer to fix roadway DOTD state problems. But there's a couple of big fish that are swimming, and they may need some progressive thinking to figure it out financially, but that's where it's going to happen.
Yeah, that extension has really been a hot spot for people trying to develop, but because the infrastructure is not there right now, it hasn't happened. So little spots have happened along the way, but I think that once they get infrastructure and once they work out some of the issues with the roadway.
Even those little spots, they've been difficult.
Yeah.
They've been difficult.
And Leslie, I think as we watch what happens with UL's master plan and with Lafayette Central Park and other communities, it's been proven that whenever you do something that we're looking to undertake for Central Park, everything surrounding that area increases in value anywhere from 20 to 40%. So we're already seeing facelifts on old tired shopping centers, and I think we'll begin to see some development surrounding the park and surrounding UL as the master plan unfolds.
When things dipped for us a couple of years ago, I mean, did y'all ever think that we'd come back this strong and this fast? Did you? You know, obviously we didn't get hit nearly as hard as a lot of people, but but everybody
for me personally, there was no dip. It was some of the best years of my career. Because in real estate, it's not always about new. It's about relocation and disposition, and there's other factors too.
But I mean, the big fish that everybody likes to go after, who's in retail. I mean, everybody was.
Well, yeah, you're right. The sexy fish were somewhere down at the bottom of the ocean, but there were still. That doesn't mean that you're not moving the other guys around.
I'm sorry.
I've never thought of a fish as being sexy.
Somewhere at the bottom.
But it's true. When
Love you.
things are a little bit
This is a
slower, there
business
is more
discussion, isn't it?
there is more
Right.
supply. So you have more movement because you got more stuff to show. I mean, like right now in the economy we're in, we don't have a lot of product. So how do you go out and move property when you don't have anything to move?
Let me just jump in.
So there are opportunities when the economy's down, which I mean.
Certainly.
I'm doing much less work in Lafayette, Acadiana right now than I was during the Great Recession. I'm doing much more of my personal fee generation outside of Lafayette because there's not enough supply right now, period.
Yeah, we have a huge problem with that.
But what Ryan's, probably not saying is that, and he and I and Monty would attend these conferences in Las Vegas annually, the International Council of Shopping Centers. The rest of the country started to feel a slowdown a year or two before us.
Yeah.
So, we saw at these conventions with 50 and 60,000 people, during the boom years, and then all of a sudden 30, the following year, and, kind of caution light,
We started hedging our
Sure.
our business.
And then you look at the oil spill, and of course affected things overnight. But you also had a community that was very strong at that point. The banks were very strong. The property owners very strong. Everybody had been just coming off some really good years, as opposed to the '80s when the banks were weak, the individuals were weak. So. Not to mention knowing that was probably a fairly large knee-jerk reaction from the 24-hour-a-day news service type of world we live in today. I think, at least for us, we knew that would get cleaned up, it would get fixed, we would kind of go back to normal. But it is, a little bit surprising that we've come back this fast overall. We were the last ones in, and we've now the first ones out.
And I
which is
think
great.
you touched on it, and I think it's exactly right. It was about our banks. Our banks were so prudent during the big escalation of the early 2000s to not offer those inverted products that people who probably couldn't pay back what they were borrowing. And they got kicked in the shin in the 80s, and they weren't going to get kicked in the other shin. They were prepared for it. And because we didn't have that, we didn't have the huge foreclosure, we didn't have the huge moving outs, we didn't have the huge going into apartment, like our residential stayed fairly stable, and that's really why we were laid in and first out. I think it's a big part of our banks.
I think another factor in that, Leslie, is just the availability of search engines. I think Google has changed our world. And when people are having to earn a living, and they need to be able to build and do things, and it's not happening in their markets, they're going to search for where in the country may I go and earn a living. Because just a couple of years ago was the first time we had national home builders and regional home builders having a presence here. And I think it has a lot to do with accessibility of information so that people can find out about Lafayette. And I think that's changing the
point.
game for us.
Yeah.
All right, obviously we've established how well the economy's doing. I'm hearing time and again from execs in the oil industry that, they're like, don't worry about it. And I mean, they're 55, 60 years old. They're like, hey, I'm set, at least for 10 years. Lafayette's good. Deepwater, we're good for 10 years. Is that what y'all are hearing?
We're
The
starting to
leases
see
are
a lot of long-term
long-term.
leases again, so that's a positive sign in my mind.
Yeah, I mean, I have no doubt Deepwater is where it's going to be. It's the big guys have been saying that for 3 years, and they've been gearing up, and a lot of the moves they have made have been totally based on Deepwater. So whether it's 10 years, 5 years, or 15, I don't know, but they're slow plays. They're not, you're
Yes.
not punching a hole in the ground in Shreveport and then plugging it until gas comes back. I mean, those are major investments, and you look at PXP is a piece of that activity. And the big guys, you look at the expansions along Highway 90, and I think it's probably very sustainable. I think there are 12 more Deepwater rigs scheduled to come into the Gulf in the next 18 months.
Oh, wow.
That's big. I'm not positive on that number.
Yeah,
but
just to
it's
check it out.
It's over 10, and I think it's over the next year and a half.
Leslie, I think it's the Deepwater, but I also think it's the extreme increase in demand that is occurring. And with that, we only used to have maybe 5 states that were really tied very heavily to the oil and gas economy in the state. And now with all those shale plays across the country, I think that number, the last time I heard, was somewhere near 30. So when you have many more states paying attention to what your national energy policy is, I think it bodes well for how things go forward. And when you couple that with the increased international demand and our ability and where our pricing is relative to the remainder of the world, we've suddenly become the country for energy exploration, along with our supply.
Anything y'all see that could happen that would sort of throw a monkey wrench into what's happening with the energy sector and how it's fueling our economy outside of some catastrophe or?
Yeah, I think the easy answer to that or the next answer would be political. You know, there's a lot of incentives that Louisiana has for the small independent exploration companies, which truly is the backbone of the Lafayette service corridor. If those things get wiped out, you really hurt a lot of the local guys here. And those are companies and individuals that really have helped Lafayette become what it is, and that is a really good community where we have a lot of high net worth individuals, but it's spread out fairly well. It's not just one company, you know, here that has all of the wealth, or Exxon is here, but it's exporting everything to, you know, its global headquarters. There are individuals here that have 4 and 5 and 6 employees that do extremely well. So if that goes away, if politically the state or the federal government changes some of those policies negatively, I think locally for Lafayette, that does a lot of bad for the city regardless of demand. Even if the demand's still there, you know, you look at these individuals and these businesses and you say, my God, they're making so much money. But at the end of the day, they make a lot of money in short periods of time. There are these long periods of time where they don't make a whole bunch of money and they have to, you know, budget themselves accordingly. So, to me, political incentives.
Yeah, and the investment that it would scare off.
You know, I attended a conference, Leslie, in Lake Charles just recently with some commercial agents from Houston and from across the state, Baton Rouge, New Orleans, Lafayette, Lake Charles. And we talked about a lot of what was going on in the oil and gas industry and what could change and what could impede the stuff that's going on, because Lake Charles, for example, is adding all these liquid plants,
LNG.
Gas liquefaction.
LNG, thank
Yeah.
you. And so if we are not able to export that gas to other countries like we're hoping we can, then that might cause a problem. So that falls back on what Jeff was talking about in terms of political. If we have a change in policy that doesn't allow us to send a lot of this resource to other places, I think that's going to
Yeah, and a lot of that's still
future.
pending too. I think only one of those big LNG projects was approved for export, so that'll be, I mean,
But I mean, look at Shreveport, you
implications
know,
for that throughout the
because
state
the
are
price
huge.
of natural gas has come down so much, you know, they've
Pull
capped a
back,
lot of those
yes.
wells. Whereas if we can start doing other things with that gas, I think those sites up north will come back into play, and they'll get busy again.
I would think, Leslie, I think the number they had announced, I was at the same meeting that David attended in Lake Charles, and I think the number they announced for the state is somewhere upwards of $62 billion of CapEx investment this year and next, and roughly 47 to 50 of it in that parish, in the Lake Charles region. And I think people that invest that kind of significant money have done so much in the way of preparing for it and knowing the what next. That gives me great confidence in what's going to be happening. And it also leads me to feel even stronger about our economy, because Richard Florida tells us that we, in this innovation economy, we will compete as a region, not as communities anymore. And the fact that we're beginning to have these meetings all the way from Houston to New Orleans bodes well for our future as well.
Yeah, I expect to see some speculative product come out. I don't think it's going to be big. I think it'll be onesie, twosie, you know, pretty conservative investment strategy for the people doing it. But we need it. I mean, the part of the reason we have no product today is during the downturn, the landlords did great, but nobody built any spec buildings.
Yeah.
So we filled up what little we had. We never really had much product on the market during the downturn, but we didn't build anything.
I mean, are you hearing right now from some people who are willing to do some spec stuff?
Yeah.
Yep, so
We're
it's
doing
happening.
it. We're doing it right now. We're doing the smaller, and we're working on doing some of the bigger. But the
And
problem,
that's
the
mostly
biggest
Highway
challenge.
90 stuff?
Yes, ma'am. And the biggest challenge we have is the price of land and the availability of land.
You know, the past 3 years, you've seen a lot of owner-user stuff, and even, I mean, the big companies, but even some of the smaller guys, it's been a very unusual cycle. I haven't done many deals that are financed. It's been mostly people paying cash for land and a lot of cash for construction. And from, you know, from the Halliburtons on down that don't finance, it's pretty astounding.
Good, all right.
Yeah.
But the positive thing is the banks do have cash to lend, and they're very eager to put money into a good, solid deal, so that
Yeah.
helps right
Yeah.
now.
Well, I still think the investor side is, it's a different, it depends on how you look at it. You know, the balance sheets for owner-user loans, you can go to any bank and get great financing if you're gonna build a building for your company that
Right,
you own.
yes.
If you're an investor trying to do a spec building, it's gonna be
More
different.
difficult.
The money's out there, it's
Yeah,
not that it's.
and not only that, and I'm not gonna talk as I'm the expert on this, but the little experience I do have, I think it also has to do with the size of what you're trying to borrow, where they may say I've got $100 million or 450 or whatever you see on the side of the road, but I think they're maximized in little bitty chunks, because once they get to a certain size, then they're gonna move it on the secondary market, and if the secondary market's not buying, then they may not take that risk and keep it in-house. So there's a lot to do with, they may say, here's a pot, but if we're only doing, you know, little spoonfuls at a time. So it depends on the project, I think.
Well, and it's the regulators.
Yeah.
I mean, I sat in a.
Paperwork's
I was
sick.
invited to sit in a board meeting for a bank, and they have a ton of money to lend, and he said, don't bring me an investment deal right now.
Now-
Owner user, I have more than I could probably lend over the next 10 years, but he said, I can't do an investment deal right now. It's, the ratios based on what the regulators are telling them have to be in line.
And what I'm seeing, there's really, I think the smaller deals are financeable and the bigger deals are financeable. The mid-range guys, I'm not sure who wants to play in that arena right now. Like the CMBS market on a national level is as good as it's ever been. Let me back up. It's good. And we're able to move big boy product.
CMBS?
Commercial mortgage-backed
There you
securities.
go.
Moving on to something a little more controversial than anything we've talked about, tips. Kind of seems to be a bad word in development these days.
Need them, love them, have to have them. On record.
All right, you got it. You got that, right?
You know, Leslie, I haven't heard that come up recently. Maybe I just haven't been to enough planning and zoning meetings or city council meetings to hear it. But, you know, I think it's done well for the Broussard area, you know, that used a TIF to do the Walmart and the Home Depot. And I mean, it's
Sterling Lafayette.
Yeah.
Well, I mean, look, when Sterling did its center, you really didn't, there wasn't a lot of, opposition to it. I think because of where it was locating and what was needed there, people even who, just philosophically opposed this kind of kept their mouths shut. Then after you had the big debacle with the College Saloon TIF and all that, I mean, it's just, nobody seemingly wants to talk TIF anymore, and maybe that just kind of needed to
But
die
it's
and
not
go
just a
away a little
Lafayette
bit.
problem. Man, our governor said he won't approve another state TIF. Just not, don't put it on my desk, I'm not gonna sign it. So they have
Yeah, I
to be
realize that, but I think that
municipality-based.
we had a pretty good taste in our mouth about TIFs and how they could work until this happened. I mean, do y'all think that that's sort of?
You hit the nail on the head, though. It's about location. If you have a TIF that is going to come into place and it's going to increase the value of the property owners around that TIF, well, then they're going to support it. And obviously, it's needed. But when you try to put a TIF on the highest, the best intersection in town, surrounded by the highest priced real estate in town, that's just going to effectively compete against the people next door with government incentives, I can certainly see why people did not want that.
Right.
As
Yeah.
as someone who owns a piece of property and everybody's fighting for these tenants, everybody's doing really well today. A lot of these property owners have been in the business for a long time, and they know that it's not always going to be this good. And this project will always have this benefit to have gotten started. And it's just a sort of an unfair advantage that the government essentially kind of picks. But in the right scenario, in the right places, I think they are needed in right scenarios. The Sterling TIF on I-10, great project. That area absolutely needed that. as Flo said earlier, it was a little bit backwards in that commercial came first, and now we're seeing, potentially Couret Farms here. And residential followed it. Usually it's the opposite. But we need residential up there for multiple different reasons, but part of that is infrastructure. That's there.
But even
Leslie,
without a lot of rooftops, I mean, those stores are surpassing the projected
Well,
numbers.
it's
They're-
about a trade area draw.
Yeah.
And they had done their homework before they chose to move forward on that site. But I mean, in attempts to avoid specificity, you're right in that placement does matter where it philosophically could or couldn't be approved or used or right or wrong or however you want to look at it. And the project that created some of the tension, it was able to progress regardless, and mainly because of the infrastructure. The brand new road had been cut through. There were some access points. It was effectively a brand new signal running at a good level. It's not a F. So that could happen organically and still succeed. Now, other projects, I mean, Whole Foods, for instance, let's just use that. I'm not saying that they're going for a TIF or not going for a TIF, but
Sure.
if it gets to a point where that intersection is so poor that effectively that land becomes worthless because a developer can't get access to the roadways to drive consumers, then yeah, I think a TIF is needed. And sure, the average household income in that area is north of $100,000. Why do these people need more, property value increases? It's not about that. It's about land that can't be put in commerce to generate tax dollars because you can't physically develop it. A pro forma can't take a $2.5 million off-site hit. It's, what they're going to do? We're leaving and we're going to go somewhere else.
But I would, really disagree with you on that because potentially the land price is too high. And part of the land price needs to be some infrastructure costs. You've got a Target anchored center across the street. You've got Albertsons, you have Fresh Market, all of which didn't have TIFs to be built. And now you're going to, in this scenario,
Sure.
which
Right,
we all
it's
know
fictitious.
is not happening. But now Whole Foods, who's the biggest and the best and they can supposedly pay the highest rents,
That part's not right. They're a loss leader, just to let you know. They don't.
Well,
There's no.
They can pay
There's
the
no
highest rate,
risk.
but they
They
don't.
don't.
Right. Well, nonetheless, you're going to give those guys this government incentive, which is going to do nothing but steal customers away from the stores across the street. So,
Or does it bring new customers in from a range that they might not have come before that generates new organic dollars?
well, that is a debate, that we could argue about forever. But still, nonetheless, it's not like you're lacking food in that area.
You need to put some
Yeah.
tea in that water bottle.
Leslie, I think TIFs are an economic development tool that have been around since our founding fathers. I mean, that's the initial fire district and water district. That's how they got services initially, was this kind of district that provided the infrastructure that you needed to provide the service you're looking for. So I think the question, when it's asked, really boils down to one word, and that is trust. And we either trust our government official to sit and take a look at it situation by situation and address these questions we're talking about and come up with the right answer. Because if it hadn't happened on Louisiana Avenue,
There's a 0% chance that project happened.
Yeah, it never
I mean,
would've happened.
Zero.
and it has done so much beyond even the wildest of projections in the way of job growth and sales tax and property tax increase and other
Residential.
developments, and it has spurred growth and development in that area of our community that would have never happened without
And
it.
let me, and I think that the trust word is a good word, because I don't believe that a TIF should start paying for internal development components that specifically go to the developer's pocket or go to the landowner's overall net value when they monetize their land, like the controversial one that was for some internal things. I feel a TIF should only be in place if it allows the development to occur and simultaneously doesn't negatively impact what's around it. Because if, let's just say the Whole Foods, it's going to drive, there's 30 acres there. Eventually all 30 acres would be commercial. And that's going to drive X amount of more traffic counts. So you go back into that traffic study, the impact analysis, and you determine that once you add all these cars at these different peak times, that F becomes, who knows what it becomes. There's no classification for it, but it just doesn't work. And that doesn't it's not an advantage for our city. It doesn't make our world better. But if there is a TIF to help with, sewage removal and lift stations and decel
Traffic.
lanes and signal timing with adjacent signals and those kind of things that allow somebody who chooses, because it is a user tax, is I'm not going to pay the extra whatever percent to drive by, go to the alternative, which I was using before. But when I drive by, my time isn't mitigated negative or impacted negatively because of this new thing. So if it's helping infrastructure to let the city sustain or improve and not necessarily go to a developer's profit margin or a landowner's profit margin, then I'm cool. When it does that, then yeah, there's a problem. Just
And I
don't
think
go.
that's the simplistic explanation for TIFs is it allows a raw piece of land to be turned into something that consumers can take advantage of and they can choose to take advantage of. And it may save them gas in the long run from driving to a different area. I mean, you could, for example, in Broussard, you can choose to go to that Walmart in Broussard, you can choose to go to another Walmart. If you go to the one in Broussard, then you're going to pay an additional 1% tax because of that convenience factor. But I don't think, and you probably know better than I do, Ryan, that they would have done that without having some sort of
I was
tip.
involved in that deal as well, and the short answer is no.
No.
But
So it's
those
good for- it's-
examples, though, are all examples of, much-needed services
Exactly.
for communities.
And I think
you
we
know.
all feel that way.
And I mean, I think there are time and places when TIFs can be huge benefits for communities like, the North Port of Lafayette and Broussard. I think it's tough, though, when you go basically head-to-head against potentially local property owners or even non-local property owners and projects that they have to do, the old way, if
Right.
you will, or the regular way. And it gives it a tough, unfair advantage at times.
And Jeff, I think at that point in time, what actually comes to the table and the question that has to get answered is how badly does the community want
Sure.
what's proposed to go there? Because if they want it bad enough, I think our community would vote yes in some instances, not all.
Absolutely.
But in some
Sure.
instances, they may vote yes, despite the fact that it has that slight unfair advantage to what's going up around it. But if they want something badly enough, I think they'll show up and voice, this is something we'd support.
Well, what you
Or,
mentioned
well, I
about-
guess my fear is that a minority becomes the majority vocally because regular
Right.
people are doing regular things.
And she talked about trust, and this
Sure.
group of them, the most vocal people don't trust government, and they're the ones who are going to
Sure,
fight
and
pretty
they
much anything.
become the majority in press and in presence and in voice and in everything else. And at some point, I think transition coming to the master plan, that they may oppose. There may be opposition to the master plan from the normal suspects or not. And I think there's going to have to be a concerted effort from the community to say, hey, look, you're 50 people representing 5%. We're everybody else.
Yeah.
And I think the biggest reason why we have opposition is because there's a lack of understanding of how it actually works.
Personally, I'm bullish on our market for, whether it's the 10-year window that the oil and gas guys are saying or not, I don't know. No one has a crystal ball, but I think we have a sustained growth pattern for a long time. I really do. Most of what I do is industrial and office, and typically on the corporate services side, that's mostly out-of-town people coming in. So, I'm not seeing a slowdown. They all seem to be in a pretty aggressive mode
So
right
you
now to
keep you busy.
continue. Yeah, I think so.
Okay, all right, good.
And Leslie, I'll offer again that I'm excited to see the healthy development cycle that we're in and the engagement of our community in that, and the fact that we're seeing it across all sectors. We used to be able to sit at this table and tell you it's a medical year, it's an industrial year, and now the calls that I'm fielding are across all the different sectors. I've 20 years of experience back in the early 80s when we were in the heyday of development, then in the mid-80s when there was a transfer of wealth in this community where we had repossessed troubled assets in financial institutions, and we had new people becoming wealthy by investing because we had favorable financing for those products. And then I've come full circle to what I view as one of our healthiest development cycles in the 20 years that I've seen it. The areas that I'm currently specializing in are retail, office, and land.
Over the years, I've done a little bit of everything because, we're a small market. It's hard to specialize in any one sector. like Ryan is able to do. But it's nice because over the last year, or 6 months, it seems like we're getting calls again for everything. And, you know, our firm has a couple hundred agents, and so I take a lot of referrals, and it seems like over the years I've accumulated a lot of land listings. And so it's nice to see those land listings starting to move because of the development aspect. We also do a lot of industrial development, and so I'm excited because we're seeing more and more opportunity for us to go out and develop and build buildings that people are looking for. You know, leasing has been strong. You know, you get a listing on a lease, and it's leased in a couple of months, whereas before we were sitting on them for 4 or 5 months. That's good. You know, that gives your investors the confidence to come in and buy income-producing properties because they know if their tenant leaves, they'll be able to get another tenant, so those cash flows will remain. So it's a great environment to be working in. You know, the last 5-6 years has been steady, and we've been able to continue to do business. But it's refreshing to know that now we're getting back into that real busy cycle where a lot is happening, and we can take advantage of different opportunities. So my team and I are staying busy, and it's a great thing.
All right, right?
Yeah, even being a self-described and proud retail nerd, the world is good. It really is. There's a lot going on. What I get excited about coming to work for every day is really dealing with the national tenants. I mean, the vast majority of my phone calls every day are with guys from Dallas, Austin, Houston, New Orleans, Birmingham, and it's their tenant rep guys or their master brokers, and even the corporate guys at this point trying to figure out, you know, what about Louisiana is good for them, and where specifically in Louisiana, and Lafayette is very high on that list. There's been barriers to entry just for lack of supply, which is why some other things have freed up, and I'm able to work across the state and do all the national retail that I enjoy doing. But my outlook is very positive along with everybody else's, and I definitely predict in late 2014, 15 into 16, you're going to see a bunch of new square footage. I'm talking hundreds of thousands of feet coming online. There's just, there'll be a breaking point where things have to happen. I'm just hoping the stars align governmentally with the developer and the tenants, and you know, getting those timing attributes all tied together with the entitlement process and everything else is difficult, but when there's enough demand, it gets figured out. So I'm very bullish moving forward.
These tenants that you're working with in Slidell and New Orleans, I mean, Lafayette's on their radar.
I'm touring with them in Lafayette. Yeah, you pick up in New Orleans and you do that, then you go across the basin once, and it's in the morning, and you do it again, and it's at night, and it's absolutely on the list. But you know, it does become tail wagging the dog for them because there's not a flag and say this is the deal we're going to pursue. It's just not there. Until we get some new product come online. But yes, absolutely, some pretty interesting and I don't want to use the word glorious, but there's some brands that our consumers are going to jump all over.
My focus over the past 3 or 4 years has been primarily office. You know, it's not the sexiest sub-market.
Fish in the pond.
Yeah, in the pond or the ocean or wherever it is. But I will say it has allowed me professionally to feel like I have a really good pulse on just the general overall economy. We've got, you know, over 100 tenants. They almost any, you know, business profession there is. We hear from them, you know, almost daily, and it's really good to see some of those guys come from 1,000 square feet units to 3 and 4 and 5, and watching them grow. And you can read the papers and look at the statistics that you guys put out and LEDA puts out, and it follows that trend. So from the office side, our portfolio occupancy is the highest it's ever been. Our rental rates are rising. Calls have not stopped coming in. All of those things are great. What to predict over the next 5 or 10 years, I have no idea. I only hope that, you know, as we do development, at Lafayette, as well as our own company, we do not get caught in the trap of overbuilding into a sector because the interest rate's too good, we got to do the deal, or there's a government incentive, we got to do it. I really hope that as a whole, as a city, we kind of continue just to plug along, but steadily grow. And if we continue to outsource the oil and gas component of Lafayette, the service sector, to the other parts of the country and the world, I really think Lafayette will see a long, continued, sustained growth. And so for that standpoint, outlook looks very, very good.